Writing an angel check is easy. Knowing why is the flex. Angel investing. Underused, misunderstood, explained badly. Angels Decoded, an educated and raw take. In cahoots with Play Money.
Andy Walsh, host, 2x exited founder, and I have the Startup Decoded podcast. Sheza, the old mate over there. Cheryl, tell us about you.
I am a 3-time founder, 3-time Ironman, 4-time mom. I'm in the middle of my 3rd startup right now. I'm also an active angel investor. It's probably worth mentioning. I've got about 50 companies in my personal portfolio. It's split pretty evenly between a fund investment I made and ones I make on my own. And right now I'm the founder of Play Money. Angels can think about it as Instagram meets AngelList, but there's a bigger, badder goal behind it that we can talk about in the coming weeks.
Sounds like you're up to mischief.
That's all I do. All I do is trouble.
So I have a question for you, because this is important. Of the 3 things that you talked about there in clusters, 3 times founder, 3 times Ironman, and 4 times mother, of those 3 groups, which is the hardest one?
Oh my God, it's being the dang mom. Ironman was a vacation from the startups and the momming, because you could just be out there all day. I mean, I wasn't a fast racer, so I got my full value out of the day, and it was fantastic. They fed me, no one could bug me.
And for
Momming is
context,
hardest.
yeah, an Ironman is no walk in the park. I don't know what the distances are in miles. I know what it is in kilometers. So can you tell people what the distances are for the swim, bike, run in miles?
2.4 mile swim, 112-mile bike, and a marathon, 26.2.
Yeah, so after all that, they throw a marathon at the end just for fun.
You know what? I did a 3 miles. I've been retired for a little while. I retired during COVID because races were hard to come by. I did a 3-mile swim this summer. And as I got out of the water, there was a whole bunch of triathletes doing their big day workout there. And so many of them jumped on their bike. And when I got out of the water, I was like, that is a dumb ass idea. Who would even think of jumping on a bike right now? Opened myself up a chocolate milk, got a chair and a book, and hung out by the lake the rest of the morning. I really have no idea what I was thinking during that time.
Well, the professionals who do it for a living do it in around just over 8 hours. And 8 hours of exercise is a lot. If you think about it, for some people, it might be a work day. If you imagine doing exercise nonstop for a work day.
And for some of us, we do double that because we're just that much tougher.
It sets up perfectly the life of an angel investor, because training for an Ironman means that you have to spend a lot of hours outside of whatever else you do. You could be a full-time employee somewhere. You could have a startup like you were doing. There's a lot of things in combination that happen. So our conversation today is angel investing is typically a certain type of person. Can you explain what an angel investor typically looks like as far as their life and their capital?
I think that's been changing over the last 10 years or so. I mean, back in the day, if you look 10 years ago, they were a bunch of, old semi-retired guys with pot bellies that would hang out at a luncheon club and have some founder's pitch. And, I think there was the same version of that on the women's side, a bunch of, older women from money. But again, the same thing. It's a luncheon. It's a social thing. They have the founder's pitch. High burden on the founders, extreme amounts of diligence, long process, not always a predictable check size, not always a big check size. It's morphed. Within the last 5 years, it started to shift that it was well-connected people in tech. So more aligned with founders and what you needed to build a great startup. But day in, day out, they're sitting in the middle of deal flow and people. Right? They're going to be in New York. They're going to be in San Francisco. It was a great movement and moment because it brought more people into the space and more people with actual lived experience to evaluate startups by, and more people with a broader range of experience. So a broader range of problems got solved and a broader range of founders got funded. Where I think we're going now, or where I'm trying to get us now, is that those people that don't live in the middle of it all the time, those people that don't have 2 things in the world they do, go to work and invest in startups, people with, full-time jobs that make them money to be an accredited investor, families, other hobbies, that those people, we're trying to make it so that next wave is those people can start investing in private market companies, not as, a round of dumb money, not as gambling, but leveraging the intelligence and the frameworks and the sourcing of those people that were in the second wave, leveraging their knowledge so they can build an asset class around this and learn and get all the financial and non-financial benefits out of it without making it a full-time job.
Yeah.
So I think it's changed, and I hope we're changing it even more.
So would you be able to sum up the last 5 years then as formalization of the angel category?
Formalization. That's an interesting take. I like that too. I just did an event a week and a half ago with the gang from the Remedy Syndicate. And that's where we had our post-event whiskey and came up with this big idea. But Jess Schramm, who runs the syndicate, said something that I don't think I've even been bold enough to say or realize. But Angel has quickly become not, extra money or not sort of fringe dumb money. It's quickly become the most strategic form of early stage capital because it's not tied to big fund math. So it gives the founder more optionality to figure out the size and shape of their business. Are they building $1 billion business or $100 million business? I got a secret for you. You do not know 6 months in. You don't even know 2 years in sometimes. It's capital that comes in with a ton of expertise now. It's not old inherited wealth and guys at the Kiwanis Club. It's former operators, former founders, Fortune 500 execs, fractional HR people. I'm talking to a group of them this afternoon. It's exactly the people you want on your side, not just for their capital, but for their connections, their expertise, their amplification. So I think what's happened is we are moving into this phase. Yes, it's formalized a little bit, but in that formalization, it's become the most strategic capital. And that's pretty exciting.
It's exciting for a lot of reasons. And let's say this is the foundation for what people need to understand. If they've heard about angel investing, maybe they met someone who's done it, or they're just curious about alternate ways to spend their capital that they may have to drive returns. So we're going to think about it for those folks who are just putting their toe in the water. So I'm going to knock on the door and I'm going to ask you for some basics around angel investment. You mentioned the term accredited investor, and it's something that you and I know intimately, and you know it much better than me because there's some fancy number codes around the different ways that you can be an accredited investor. But for the folks playing at home, what are some of the basic things you have to be an accredited investor?
Yep. So accredited investor, pretty straightforward. You either need $200,000 of income or $300,000 with a partner, like a spouse partner, not just like someone you pulled off the street. Hey, you're making more than me. Let's be accredited together. Or $1 million in assets, not including the equity in your primary residence. Or you've had to have taken a financial licensing exam, Series 7, a Series 65. But here's the thing about it. So right now, 1 in 5 households in the US are accredited. Chunk of people. In most startup fundraising, the way you show you're accredited is through self-attestation. So like on my site, Play Money, we are going to ask you, hey, are you accredited? Which category of accredited are you? Check the box. Sweet. You're a grown-ass adult. We're going to trust you. So this is not I'm accredited. I have to show you paperwork and my taxes and you're going to check up on me and audit me. If you're accredited, tell us. If you're not, you're not.
It's not going to be a certificate you put in a frame and hang up on the wall, right?
No, and no one's going to go track you down. Like I've had people ask, well, I made 300,000 last year, but I'm taking a little bit of time off on, family leave. And so I might make less. I'm like, stop talking.
So to step outside it, in simple terms, basically it's ensuring that the person who is investing is not stretching their means beyond what is capable. So it's a benchmark to have a little bit of policing on the investor side to make sure that they're not going too crazy.
Yes. And it's not a choice. It's like actually the law. So we have to ask and people have to respond. I know a lot of people think it's silly too, because you don't need to be accredited to bet on Kalshi or Polymarket. You don't need to be accredited to go to like Chancey gambling casino. Like it is what it is. But those are the rules.
Okay. So next step then, you talked about 20% of households in America are technically at that threshold. I don't know the stats on American households. How many households are we talking there?
We're talking like between 20 and 25 million. depending how you look at the numbers. Like that, we've got a lot of dang people. And the most recent numbers show that way less than 1 million have made an angel investment at all, like even one. There's like, I mean, someone like me on Play Money, I'm like, there's blue ocean out there, baby. What's most interesting about that group is that there's been a number of surveys of accredited investors, and 75% say, yes, I would love to be investing in startups. I just don't have the access, the knowledge. Like I don't know how. And they think the money barrier and the time barrier and the knowledge barrier are really, really high. I mean, honestly, when I started and I sold my last startup, I started learning about angel investing, never thinking I was going to write a check. Because again, there's no way I knew enough. There's no way I had enough money. I'm living and breathing in the space, and even I didn't know it's a place I could play. So it's real. The thing keeping people out is it's not desire and it's not dollars. It's access and knowledge and perception of time.
So the formalization that I mentioned before that you built on is very much what's happened to give people more education, more access, and the ability to look at that as a legitimate way to put their capital into one, support founders, but two, drive a return. So in that process, take us through in simple terms, if you landed on Play Money and you wanted to invest, what does it look like? You talked about being an accredited investor. So I assume that's the first step that happens in that process. What happens next?
So, I mean, it's like sign up on Play Money is going to take you under a minute. You tell us you're accredited. You say, yes, I'm not under arrest from the SEC. Yes, I'm going to do my own diligence. No, I'm not going to sue you if my investment doesn't work out. Like pretty basic questions. It's always free to lurk and learn on Play Money. We're not going to charge you to be there. This is not, join our special angel education group, $3,000 a year. Join this education class, $4,500 a year. It's free to lurk and learn. We want people to get reps seeing deals. So then every week we'll present you with one super well vetted, super well curated, a startup deal with all the information an experienced investor would want to see to make a decision. Make it sort of social media friendly. It's, you hear why other people invested. You've got short form video. We've made it more engaging than reading a really dry, long deal memo and trying to figure out what does this mean. We want people to get reps seeing deals so they can figure out their own style and their own taste and the things they like. And increasingly, we're trying to not just give you the information, but tell you what it means and how to interpret it. Right? So learning woven into the process of acting, learning while doing kind of things. But then when you want to go invest, I mean, it's click the big green button, give us your dollar amount, and we'll give you guidance on maybe what your budget should be before that in our education materials. But then we KYC you just like any banking or fintech product would. Let's be really clear. We need to get your social security number because there's going to be tax forms one day. So let you hook up your bank account. Boom. It's pretty quick. People have been surprised. They're like, that was way easier than I thought. I was like, yeah, doesn't have to be that hard.
To help people listening, watching, I'd like to break it down into words. So we started with one, which is formalization of what's happening with the category. The second one here I'm going to lean on is validation. Validation happens in different ways as far as you as an investor being able to trust a platform like Play Money that is helping you on your journey, educating you in a way that doing it directly never would. Like doing it directly, if you don't know what you're doing, it's easy to go off piste and end up in a bad place. You may get lucky with a Hail Mary, but a structure that you have is helping others learn. But the community element too is another validation method, right? If you see someone in there who's a known person or at least has some really reputable experience in a corporate capacity, just having that sense that there's other like-minded people on there that you can trust, it gives you a sense that you're able to put something down. It doesn't have to be big, and we'll go on to that next. But in that validation you're getting from the platform, legitimacy of that, but then also the people that are in that community, that goes a long way to give you confidence.
Totally. It absolutely does. And it should.
Yeah. So then you've done that and you get some interesting businesses on there that have been vetted by you. The next part that I
Well,
know.
I'm going to interrupt you there. Let's be
Okay.
clear how most businesses, most startups we put on Play Money, like the vast majority, have some level of professional investor behind them. Usually other people's money for a living has done a level of good hygiene diligence and has also selected this company out of the hundreds or thousands that they see before they write a check. So someone So the deals are diligenced with that, level of rigor, not by us. I don't want to lead anyone astray. What we do is we call and curate a little bit. Curate, obviously, for the tastes of, the various subgroups within the broader Play Money platform. I mean, curate a little bit with a founder's eye. I've been a founder for a hot minute. I've worked with, at this point, dozens of founders. You get a spidey sense of like, is this founder resilient enough? Are they determined enough? Are they smart enough? Are they playing in the right space? Is the market big enough? Like you get a sense of it, a sense of it. And we put the deals on the platform. I mean, founders might think it's hazing, but we're like, okay, great. Put your deal up on the platform and then go raise from your own network and own community. Show us some traction. Show us you're hustling this. Show us people that know you and meet you directly would invest in you. Right? You've got a professional investor. Now show us you can, hustle a broader network of angels. And only once they passed all three of those gates, the professional investor, the Play Money team spidey sense, and the will actually prove it and show us, only then do we roll them out to the broader community. But it's great because then they have professional, the professional stamp of like, this is a clean, well-lit space. They have the social proof wrapped around them. And it's a really complete body of information. So, any angel that comes on could say, look, this might not be the deal for me, but it's a perfectly good deal.
Great. And all those things are really important because, as I touched on, you can get your fingers burnt pretty easily if you don't have the breadth of experience to understand what you're getting yourself into. It's easy to get caught up in the $100 million, $1 billion exits where you feel like you can just make bank on a small check. But a lot happens before you even get to that opportunity with a company in that early stage. So all of that's really important. So for today, I want to leave it there because this is our 15 minutes of power. And
I know, only 15 minutes. And what an exciting format for a podcast. I'm not a big listener. I don't like noise in my ears. So I'm like, we got to keep it short.
Yeah, we do. And I want to do little chapters. And today was a really good little taste test on what an angel investor is, the steps you need to go through before you even invest. The next part, as far as the types of businesses that you would like to invest in, and then what role you can play with those businesses would be interesting.
Okay. Yeah, we can do that. We're going to have to figure out our groove on like what education level or what experience level we want to hit. I don't want to go too Angel 101. Like there's a lot of free resources out there to define some of the basic definitionals. I want to go like a little bit but what do those basic definitionals mean? And partly because that's content's more interesting, but also that gives me plenty of place to like spice some hot take into it. We were pretty low hot take today compared to last week's. So probably better. People might turn up and see us again and not get scared away.
Well, we need to bring some spice occasionally, keep people on their toes. That's important. But this is a pairing that Cheryl and I have pulled together ourselves. And we've done it because we want to help the angel investment category in startups be more buoyant and nurture founders to be able to change the world. And that's really important from a philosophical point of view. I have my own podcast, as I said. Cheryl is my collaborator in mischief. But she's the boss.
Your word is cahooting. Let's cahoot some more.
We are in cahoots for sure. Cheryl is the boss. She knows a lot more about this than me. But for today, I want to thank everyone from listening. We've got more coming, and the opportunity here is to give people a sense of what they can get. I love the angel stage because my favorite part of a startup is that early stage of building a product, launching, and then getting momentum and growth. It's fascinating and it's always exciting to be around.
Absolutely. And there's so much that the people in it don't tell you. They tell you a lot of stuff and it's all the same stuff. If we can get at the stuff that people aren't really telling you when you're new in the space, we're going to have a fun time. I'm excited.
Awesome. This is Angels Decoded. That's Cheryl Kellond. I'm Andy Walsh. Thank you.
Bye.
Angels Decoded, a weekly podcast for people learning the craft. Angel investing made easy. Subscribe, then decide. Angels Decoded in cahoots with Play Money.